please extend a warm Georgia Tech welcome to our guest, Grace Fricks.
Thank you. One. Do we work? Yeah. Good. All right. 10 years ago, ACE, or Access to Capital for Entrepreneurs, got a call from a woman who lives near Blairsville. That's on the North Carolina-Georgia border, up in the mountains. Diana had been referred to ACE from a domestic violence program. And she was referred to us because she has a micro business, and obviously she needed some help. As the founder of ACE and its staff of 2 back then, I made an appointment to go see Diana on the following Friday. I turned on a gravel road that dead-ended at an old mobile home. By the time I grabbed the paper loan application off the front seat of my Jeep and got out of the Jeep, this 35-year-old woman with long brownish hair and jeans and a t-shirt had walked out of her trailer with her hand out, and she said, "Hi, I'm Diana. You must be Grace Fricks." Over the next hour and a half, Diana shared her story of rearing 5 children as a single parent, along with her house painting business. She shared her dream of having employees, growing the business, and earning enough money to build her own cabin to live in. She needed $250 to buy a pressure washer that was broken, and she needed it by Monday, or she was going to lose a house painting job. Now, Diana had these really strong arms, so I could tell, that she did manual labor, and she fought tears as she was talking to me, trying to show me that she was professional and show her business side. But I saw determination in this woman who was raising 5 children alone. So instead of using the paper loan application, I turned it over to the back side and wrote an I.O.U. from Diana to ACE for $250 to be repaid over 6 months, pulled out a checkbook and handed her a $250 check. Today, ACE has done thousands of dollars of loans for Diana's painting business, where she has employees and contractors. She still has up and down struggles, but her greatest success is that she's broken the poverty cycle for her children. She actually has 1 child that's in college. 2 have vocational degrees, and the other 2 are still in high school. That's success for her, and I think it's success for ACE too. Now, since Diana's loan, ACE has made $22 million worth of loans in micro and small businesses. And as Cynthia said, we were named one of the top 10 micro lenders in the country by CNN Money. So good afternoon, I'm Grace Fricks. I'm the founder of ACE. And I lead a team of extraordinary people, 14 now instead of 2. And they do loans, small ones, and they do larger small business loans. And those loans are coupled with business advisory services. I want to especially thank N2M, Enterprise to Empower, which is an organization that invited me here, and they were started by students, they're operated by students, and their purpose is to provide educational and other kinds of opportunities about social enterprise to Georgia Tech students. Angela, are you here in the audience? She's the president of the organization. So raise your hand so they'll see you. So if they want to be members and don't know about it, they will. So ACE is frequently referred to as a social enterprise. And the reason it's referred to as a social enterprise is because we use for-profit methods, business methods, for a social mission. And that mission is obviously, it's to help underserved Georgians who want to own a small business or who have a small business. Our structure is a 501c3 Georgia nonprofit corporation, which means it is a not-for-profit corporation, so it accepts donations and receives grants from private foundations and from corporate foundations. As of today, we are 69% self-sustaining through earnings. We one day will be 100% self-sustaining as our portfolio grows larger. ACE's target market is small businesses and aspiring owners who are underserved by traditional financial institutions. So that would be typically banks, credit unions, the like. So we primarily serve people who are low and moderate income, people of color, and women business owners. Our borrowers have created or saved 3,500 jobs since the recession. The single most important thing that we do is called asset building, because our work helps underserved people create the asset of a business. And it's through asset ownership that you move into the middle class. And those businesses become job creators. In the US, 87% of all businesses are small businesses that have 20 or fewer employees. I want to say that again because every time I hear it, I think, can that really be right? And it is. In the US, 87% of all business are small businesses that have 20 or fewer employees. In Georgia, it's 89%, a little bit higher. So I'm going to share some other stories with you about our borrowers. And I want to ask you to think about, what do you see in their stories that tells you that they're entrepreneurs? What are their characteristics? What qualities do they have? And then, are you sitting here going to be one of the 87% in the United States? Let's see this one. This is I.O.U. Cooper. I.O.U. is the owner of an adult daycare called Sarah Care, which is a franchise, and she's in Snellville. I.O.U. used to work for a public relations firm, and at the same time, she was taking care at home of a grandfather that has Alzheimer's. And so she decided that she wanted to leave the public relations firm and do something to help people that have seniors. So she's really uniquely qualified to start something like this because she has the personal experience. She went through a really hard time, and after getting it started, she needed to borrow $35,000, and she'd been open for maybe a year. and she had some blemishes on her credit. So our loan officer worked with her, and she's doing well now. Now, even though she still has struggles, as most people do, and struggles including went through a divorce, she stuck with it, and we stuck with her, and she stuck with all those families who depend on her for the services. And she's in Snellville, which is Gwinnett County. This is Sergio Moreira, the gentleman in the blue. Sergio and his wife, Laura Estrada, have a Mexican restaurant called Pueblo's. And Ace got a call from a local banker because Laura and Sergio wanted to buy out the third partner so that they were the sole owners. So the deal with the bank was the bank would do the loan for the building and the property, and they would take the collateral, of course, of the building and the property. And Ace would provide working capital, and our collateral would be furnishings, equipment, tortilla chips. And we did that. Most people don't like to lend to restaurants because they're so risky. So you have to know what you're doing in order to lend to them. And Sergio and Laura are actually from Uruguay, no, not Mexico. But they have branded wisely, because of where their restaurants are, them as Mexican restaurants. And they don't have cookie cutter Mexican food. It's special. They use an employee training program and a profit sharing program. As a result, they probably did that 6 or 7 years ago. They now have 5 restaurants across North Georgia and are very successful. They're also working on a venture back home also. Speaking of Mexican food, this is Emil Bekaroff. Now, Emil came to this country with $400 in his pocket. He's from Bulgaria. And what he did for a living was making burritos at a restaurant. And at the restaurant, what he noticed was that, and this was in Atlanta, that bottles and cans were just being thrown away. So he decided he wanted to start a recycling business. So during the day, he would make his burritos at one of those restaurants that I'm sure you all know. And then at night, he would sleep in his truck until 3 a.m., get up, and do his recycling rounds. Now, that truck was financed for 24% interest, and that made his payments $1,000 a month. So what we were able to do is we refinanced the truck through our Georgia Green Loan Program, and we're able to give him a 6% interest, which cut that payment in half. So they gave him $500 more a month for working capital. He now has 3 trucks. Well, he doesn't have the burrito making job anymore either. He has 3 trucks, employees, and contracts with Atlanta hotels and some other large contractors. So the last story that I want to share with you is about Terry and Dawn Hall. Have you all seen the food trucks in Atlanta and know about the food truck movement here? These guys created one of the first, and it's called Happy Belly. And we're going to show you a video that's 3 minutes that captures them. During the recession, Banana Republic made the video as part of a national Create Jobs USA campaign to raise funds for nonprofit lenders like ACE. So note in the video, Terry refers to ACE as ACE Capital. Special guy. That's good. You can leave that up for a few minutes. Using Happy Belly food truck as an anchor, Terry and Dawn, his wife, created a catering business and an event venue service for all the Atlanta food trucks, where they do the scheduling for all the trucks. Recently, at age 40, Terry died with cancer. But his business and his passion for reducing childhood obesity lives on in his sister and brother, because they moved here from Ponchatoula, Louisiana, to help Dawn run Happy Belly and the other businesses. 3 weeks ago, I witnessed a magical moment worthy of reflection about the role of small business and family in community, when the Happy Belly food truck led a car procession to a celebratory reception of Terry's life after the memorial service. So in closing, did you ask yourself if you have anything in common with these people? Are they like other people? What is the spirit of small business? There are numerous articles and books on entrepreneurs and their characteristics. But for me, I see 3 really just basic, essential characteristics that captures the spirit of them. Number 1, entrepreneurs see the world as a series of opportunities where others see threats. Some call us fearless, risk takers, courageous, optimist. Number 2, entrepreneurs are doers. We take action. In your environment, in particular here at Tech, you will come, or have come, and probably are, around people who have many just tremendous ideas that are transformational to create a product or a service, change the world, make money. An entrepreneur implements it. The idea is not worth anything. I'm in my 50s. I've been around many, many brilliant people and many, many great ideas. But it's those people that step out there and do something with it that really counts. The third quality is we have an uncanny persistence for success. So people call that not giving up and not accepting failure. And some people say, oh, well, they learn how to be flexible. That's all true. One of the things that we do, though, is we try it, adjust it, make it successful, and then we turn around and do it all over again with another product or another service or another idea. So from where I sit, those are the 3 top characteristics of entrepreneurs and these small business people that we work with. So now it's your turn. Thank you for listening, and I look forward to answering questions and also hearing some of your thoughts about what the spirit of business and entrepreneurship is. Oh, by the way, while you're doing the microphone, we don't do those lines on the back of sheets of paper anymore. I think I was the only one that ever got away with that, but that's because I'm the founder. We use very sophisticated systems.
Let me start off by asking a question, then we'll turn it over to the students. I'm just curious, as a 501c3 lender, are you, not required, but are you limited in terms of who you could actually make loans to, or can you make loans to any commercial enterprise?
Okay. The 501c3 nonprofit part is about a charitable purpose. So theoretically, you could make loans to anybody that you want to, but you still have a target market for the majority of your work. Now, in our particular case, we are something called a Community Development Financial Institution, a CDFI, and we are certified by the Treasury Department. And the Treasury Department will certify nonprofit loan funds that serve an underserved target market, like I told you about, low, moderate income people, people of color, and then sometimes geographic areas. Like we originally started near Dahlonega, Georgia, near Cleveland, Georgia, in the mountains, because I married a guy and moved up to the mountains. And so the Appalachian area, that's where the Southern Appalachian Mountains start. So the Appalachian Mountains are there. So that area, by definition, is low-income white people. Does that answer your question?
Sure. I just wasn't sure that to get that designation, you had to actually
60% of our 60% of our portfolio has to be to our target market. 60%. 40% can be to other folks. In fact, during the recession, it used to be our entire portfolio was mostly women and people of color. And during the recession, well, y'all know this, the banks quit lending, particularly to small businesses. And so at that time, we made the decision that small businesses that were run by white men, we would look at them because they couldn't get capital anywhere else. And so now our portfolio is 49% male. It won't stay that way for long. We just introduced a new program called WISE, Women Investing in Successful Entrepreneurs, and it's a program that's tailored to women because women in Georgia has more women-owned businesses than any other state in the country. But they're number 13 in the number of employees that they have, and number 21 in revenue. So that just says there's a lot of work to be done in helping existing women-owned businesses to build their capacity so that they make more money and hire more people.
Hi, my name is Priya, and I have two questions for you. You just touched upon the different percentage of the portfolio of customers that you have. Is there a criteria that you have when you're selecting who you're going to lend out money to? And second thing is, does ACE just lend money and that's about it, or do you help entrepreneurs with the progression of their ideas as they are forming their business plan? Or is it just that, okay, you have a full-blown idea and I'm just lending you the money?
Okay. The first part, there's definitely criteria. Just like any lender, and those of you that have been, are in some type of finance, we took a look at, it always was the 5 C's of lending. It's pretty good for a social worker to know that, huh? But we look more at 3, which is your cash, your capacity to repay the loan. Because if we don't want to give you more debt if you're already in a lot of debt. Then we look at collateral. Now, it doesn't have to be one-to-one. Just like the story about Sergio, those are all true stories, in looking at his ability to repay or global cash flow, and also the existing business and character. we knew that, well, you don't ever know 100% because when you're lending, I mean, things happen and people don't repay you. But we knew that we didn't need to take there wouldn't have been a deal. There wouldn't have, I mean, just face it. The banks are going to take your land and your property for collateral because they're collateral-based lenders. We are more cash-based lenders. So we're going to be looking at the project itself or the business and the person. And yes, during the recession, we have been asking for collateral, but it's going to be weaker collateral. Banks don't call, but we take collateral. Cars, inventory, Rolex watches. Can you believe somebody had a Rolex? Yeah. Oh, well, y'all may know lots of people have Rolexes. Our clients typically don't have Rolexes. But yeah. And the other was, oh, and you know, I want to tell you something else about that too. We actually use, I mean, we have an underwriter that looks at the application and the business plan for loans under $50,000 because that's sort of the cutoff in our minds that 50 and under is the micro in this country. The loans over 50,000, then there's stronger criteria. Our loans over 50,000 average about 135,000, although we will make them up to 500,000, depending on what the business is. And I mean, it's like it could also be something in like a grocery store. We're getting ready to do a grocery store, part of it, not the whole store. They're like $14, $15 million. But we're going to do part of a store in Northwest Atlanta, which is over by Morehouse, and a very poor part of Atlanta. Oh, it's close to here too, isn't it? Yes. I always get that confused, but where the food bank is, that area. Yes, yes. Mm-hmm. Yeah, and we do not work that much with people that aren't borrowers. We refer and have partnerships with people that are not borrowers, but if you are our borrower, you definitely get business advisory services. I mean, we have the staff person that runs that for our whole program is here in Atlanta. So there's classes and seminars and that type of stuff, but the most valued thing is one-on-one so that you can get that personal attention. And Aisha, the woman with the adult daycare, I mean, we work very closely with her, especially because she had some financial difficulty that needed to be worked through. And our website, by the way, is aceloans.org.
Hi, my name is Bianca, and I was wondering, what are your thoughts on interest loans versus non-interest loans and their impact on social development? So in other words, do you think that giving loans with interest works better than giving out loans without interest?
I can't speak to international. I can only speak to domestic. The way remember I said that we take donations and that kind of thing. Well, that helps subsidize the operating expense. But the way that we lend millions of dollars is not through donations. That's through borrowing money. So we borrow from the Small Business Administration, from foundations, from banks, from impact investors, but we have to pay them for the money, borrow them. So yes, we've got to charge interest. So our business model wouldn't work if we relent the money for nothing because we would be at a continual loss. Is that what you were talking about? Yeah. Okay.
How do those rates compare to just a commercial, like a Wells Fargo loan, for example?
Okay. Our rates on the small loans, the average rate is going to be about 8%. Now, I can tell you that is very, very low. Right now, when you look at rates that banks are advertising, most of that is for their top-tier customers and I mean top tier customers. And they don't last long. They probably aren't exactly variable, but the loan may be made just for a couple of years. So you can get, if you're a top tier customer, you may be able to get 3.5% or 4% for 2 years, but then it's going to move. And another kind of bizarre thing that happened is the banks, they're all vying for the same top tier customer. Your Wells Fargo, your Bank of America, your PNCs. Now, I'm not saying they don't do any small business loans, but I mean, that's the name of the game, is getting the very best, well collateralized cash flowing customers. In the field of microfinance, in the United States, your average loan interest rate is going to be between 14 and 16%. Because remember, you are dealing with a high-risk population. In 2008 and 2009, is that right, 8 and 9? Or it was, yeah, 8 and 9. No, I'm sorry, 9 and 10. That was the height of the recession for us. We hit a 20% default rate. That means only 80% of the people were repaying us. And remember, I just said we borrow all that money. The next year, we hit a 17%. I mean, that's when your entrepreneurship stuff really comes up, because you have to dive deep to move through those kinds of odds. And what I was telling Dory earlier is what we did was a lot of programs similar to ours in other parts of the country. Some of them don't exist anymore. They hunkered down. You know, let's just wait till it's better. Ooh, we did the opposite. Counterintuitive. If everybody's hunkering down, you better go the other way or you're not going to survive. And we did. We took every bit of retained earnings, working capital, everything we could, hired more people, borrowed money from the federal government, and worked like crazy to get money out. And instituted some different technology systems in our own program. And it worked. It worked. And now, you know, we've got an $11 million portfolio, and that has grown 266% in the last 2 years. So it's just, we made it through that, and our default rate is less than 3%. And delinquency, the people that are late, that's less than 1%. Now that is not just a reflection of the customer. It is a reflection of those 13 staff that work with me, for me and with me, because they're believers and they go the extra mile. And none of them are social workers that would ever write a note on the back of a piece of paper. A lot of them are former bankers.
Hi, I'm Claudia. And going off from what you were just answering, what are the consequences of a borrower like missing payments? And what do you go about fixing that?
If you miss a payment, what do?
Yeah.
We have Guy call you. We have a person, I mean, we actually have a full-time collector. Now, the collector makes the call, but the calls are different from us because we're mission-based. So the calls are not, you know, where's your payment? The call is, what's going on? The 10-day grace period went by. Is there something wrong? Is there something we need to help you with? I mean, those late payments are an indication that there's a problem. Now, the woman that asked me about the business advisory services, that's one of the reasons you have business advisory services. You want to help people be successful, but you also want to be close enough to them to where if they are having an operational problem, you can either help them yourself or get help for them. Because we by no means, we don't have all the answers. We have probably 20 contracts with people that do web design and accountants and just all different types of people, but we match them together and stay close enough to the client so that we can help them through it. And then, I mean, I'm not going to tell you it always works perfectly. It doesn't always work perfectly. I mean, there are times that people don't do you right, and it feels terrible. It's like a breach of trust when someone has agreed to pay you and you're doing something for them, and then they go back on that. Sometimes it is life, too. Sometimes y'all all know it. You can't fabricate customers. Sometimes you're in the wrong business. Sometimes you shouldn't be in business. Sometimes a child's born that has a medically fragile child. I mean, things happen. So that's why you're run just like a business in that you have a loan loss reserve. I mean, we're rating all of our loans, and then we use segments for the microloans because there's so many of them. We rate those and reserve money for the things that are going to happen that are unplanned. That answer? Okay.
Hello. Okay. During your talk, you talked about how people have this driving motivation with the stories you shared. So I was curious what your personal driving motivation was for creating ACE and what your reasoning was for starting that, because you didn't really go over that. So
yeah. Well, I don't know if you recognized it in the bio, but ACE is sort of like, I think the new term is called encore career. I had 20 years, I have more than 20 years working. 20 years was in a totally different field, in health and human services in different parts of the country. Nothing to do with lending. Now, when I went and got the MBA, I was really fascinated with corporate social responsibility programs and, frankly, just the idea that empowerment for people in this country anyway, probably everywhere, is green. Green. That's what makes people successful in our world. Now, obviously, I titled this Spirit of Small Business, so I don't personally believe that money's what everything is about, but for people that have very, very little, it's significant. So I have a consulting business, and I've always just been kind of a self-employed and an entrepreneur, and I'm from a family of it, and I always like to do things my way too, you know. So the technical college in North Georgia, because remember I told you I married the Appalachian guy, wanted me to start a loan fund. And they had a federal grant of $50,000 for the loan fund, the pot. And I had a business I was running, so in health and human services, and my clients were mostly in Atlanta. But I thought, you know, how much trouble can you get in with $50,000? So I did it, just sort of for the fun of it, just to see what would happen. And I never dreamed of what would happen, because really I started falling in love with the clients. I mean, I loved what was happening in their lives. And so by 2003, I told all my clients out of my business in Atlanta, I said, I'm leaving. You got 3 months. I'm leaving, and I'm going to do this work on, at the time, just micro lending. And they were like, that hobby of yours? I said, that's not a hobby. You know, that's real. And so that was in 2003. And so I don't know that this is the end either. I think that's one of the things about entrepreneurs. Now, in this particular work, what's been fun is, yes, we can help people with microloans. Well, then it becomes, well, let's do larger loans, okay? Well, let's do Georgia Green Loan. So we've created a whole nother brand with a program in Savannah and Albany, a whole different website. Then it's like, well, let's get into healthy food financing. And now we're in WISE, or the women's program. So I think if you've got an inkling to start things up, it's different every time, but you just keep doing it.
Hi, I'm Samira. Sam, you actually stole my question, but
Well, there you are. Okay.
so I have another question. How do you differentiate yourself from competition? There's a lot of other businesses and companies that do something very similar to what you do, which is like give other business, like small businesses, loans. So how do you, like, what qualities do you have that other businesses or other competing businesses don't have?
Okay. There are not, in Georgia, there are not many nonprofit lenders. I mean, of course, there's finance companies, and I don't think we're supposed to have payday lenders, but we probably have a few under the table, and small business lenders and banks. We distinguish ourselves, one, by our target market, because who we are trying to get is not just anybody. It's got to be a small business, and it needs to be a person of color or women or low, moderate income. That's what we're going after. And when people find us, and our number one referral source actually is the web. Number two is banks. And then number three are our current clients. But when they go and look at our website and call us, they realize that we are high-touch lenders. We don't just do a loan and see you later. If you've got any other ideas about how we could distinguish ourselves, that would be great. I'd love to listen to them. I really would.
You can give out toasters.
We can do what?
Give toasters.
Give toasters.
Yeah. Hi, my name is Brittany. Okay, so I heard you were saying that ACE is like 70% sustaining, and I was wondering where your revenues come from and what your plans are for the future to become 100% sustaining.
Grow larger. Our revenues come from interest and fees, and we also do the loan back office for some other loan funds. So once you develop a full-time collector and the loan software and the ACH for the payments and accounting, the accounting and loan process, just all the back office stuff, and the operations center, just like a bank does, then that's fixed cost. So we're really, really good at that part. So we have there's other organizations who they pay us to keep up with the payments and the collections and give them the reports on who they're lending to. And we have figured out that at 36 million outstanding loans, we should be 100% self-sustaining. But see, we are at 11 million outstanding right now. And we're projecting to grow 8 million this year. So we'll see. Projections, just like in class and the forecast and that kind of thing you do. That's what you're planning, but it's possible that the portfolio is going to have to get larger depending on the kinds of services that you provide, because it's the services that make it expensive, and plus all those fixed costs, which is why we service for others.
Hi, my name is Divya, and I'm really curious.
I don't think you're on, yeah.
Hi, my name is Divya, and I'm really curious because I'm very interested in starting a small business and stuff. With your experience of seeing so many businesses come and go, succeed and fail, what are some key factors or trends that you've seen in an entrepreneur or their business idea that you think works? And obviously it's not like outside factors like the market or the economy, but something about them or their idea that you've seen over and over again.
I think, and you would probably know this better than I, because there was data on this about 8 or 9 years ago. If you come from a family of self-employed people, statistically you are more likely to be successful because you know what you're getting into. I mean, so many people say, oh, I want to have my own business because I don't want to work for anybody anymore. I want to be my own boss. Every customer is a boss. Literally. I mean, every customer is a boss. And so if you go into it thinking that you're going to be able to do just what you want to because you have no boss, you're wrong. The other thing is, people think, I'm not going to have to work as hard. Oh, no, 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 no. If you have a 40-hour-a-week job, you can count on working at least 60 hours a week, but more like 80. You really can. I mean, because especially in the early years, because, I mean, you're the one that, well, even for ACE, I did QuickBooks. I set up the original QuickBooks. And the CFO laughs now. None of them can even imagine that I used to know how to do something like that. You know, I did the original flyers with using, you know, probably some kind of Word or something like that back then. But I had to take out the garbage too. Everything. I mean, usually you're a one-person operation, and then even when you're 2 or 3 or 4, you still don't have. You have to wear a lot of hats. So you just got to be willing to work really, really hard. I mean, all these people, and we keep about 250 clients at all times. They all have to work really hard, or they're not going to be successful. And then the woman sitting to your right, she works with really large businesses. And she would say the same thing about the really large businesses. You never take a. I'm not saying you don't have some life balance as you get larger. All of a sudden I thought, as I was answering that question, I was remembering my 24-year-old loan officer saying, I'm not going to work on the weekend, Grace. Okay. Or our CFO is 33 years old now. So yes, it is a little bit different with your generation. I mean, I'm out of the baby boomer generation, you know. I don't know, did that answer your question at all?
Hi, my name is Kiwi, and Samira kind of stole my question about competitors, but on that topic, I was wondering what your thoughts were about other platforms for small businesses like Indiegogo, which use crowdfunding. Do you, like, on one note, do you see them as competitors or perhaps a potential future partner?
Yeah, there you go. Yes, potential partners. Mm-hmm. No, I don't see them as competitors at all. No, if someone can get money from someplace else, great. Great. We want them to. I mean, if it's a good price. And I just think we're just going to have to see what happens with the whole crowdfunding, crowdsourcing thing. We actually are going to do an offering with a company that specializes in nonprofits in Georgia just for ourselves. So, no, I don't see it as competition at all. I'm excited about some of the things that are happening in the market right now. We are going to do a national pilot with an unusual type of company. It's not coming out of the crowdfunding model, but it is an alternative lender. And some of you, pretty controversial, actually. Some of y'all may have heard of on-deck capital. And cabbage, you heard of cabbage? Yes, similar to cabbage, that type of idea. Those things are fascinating because those are people who did not come out of the financial or banking world. They're tech people. You know, I mean, gosh, they're probably like you guys. I mean, they're technology people who decided to use their skills and expertise to create a platform and then enter the financial market, as opposed to financial people sitting around saying we need something and then going and getting a company to build a platform for them. Those platforms, and On Deck in particular, they make a decision in 48 hours. Now and it's all done automated. They built the algorithms, and of course those algorithms, I mean, they invested millions and millions of dollars to come up with these algorithms. And they don't depend on a credit score, which, by the way, be sure to check your credit scores. That is so important in life. And I don't see that changing anytime real soon. And I bet y'all talk about that in class. I mean, it gets used for everything. But they don't use credit scores in lending. They are using other kinds of big data. And we, even though we're a nonprofit lender, we are working with our national association, with other nonprofit lenders, and we are leasing the platform at a significant reduction from other types of organizations that get to use them. But we'll be able to make a loan in 48 hours. Now, their target are businesses that have at least $100,000 in revenue. So they're not the micro business, but it is Main Street business. But that's going to be something really interesting to watch with us too, because we are going to be one of the first in the country to use the platform and try to get capital out quickly.
I'll make this our last question. Can you hang around just for a few minutes afterwards?
Oh, yeah. Oh, yeah. Yeah, and I want to hear about I'd love to hear if any of y'all are going into social enterprise. I mean, I would love to.
Mine's actually a two-part, Alan, okay? So part one. I have the microphone. Part one is, you know, it's fascinating for me to hear you speak, because even though I was aware of ACE loans, I didn't understand the full, thick tapestry of the collateral service that you give to your, when you partner with a borrower. And that comes to the first part of my question. As I've traveled to China, India, and some parts of Africa, I've seen quite a bit of commercialization of microlending and a lot of creep toward consumer loans that have really gotten people in trouble and have gotten microlenders in trouble. Yeah. How do you avoid that, since it's not the companies that are responsible to pay you back, it's the people, right? So you're not lending to a company, you're lending to a person. And so how do you avoid that mission creep of not building the capacity of the people through your microlending, because they're consumer loans?
For us, we do not do consumer loans. You can't, I mean, if you want to just borrow money but don't have a business or aren't starting a business, then, I mean, that's not our market. But we do look at personal credit, because it's supposedly predictive of how you will repay. But importantly, we report credit both on personal and business. Now, some people say, oh, you're reporting credit, that means if something bad happens? No. I mean, well, yeah, if you don't pay, it's reported too. But we build people's credit. That is very, very important to have a good credit score. And a lot of low-income people don't have credit at all. And so you're building the credit. As far as mission creep, golly, I don't know. I really don't. That, you read the literature and talk to everybody that runs any kind of a nonprofit, and they'll all say, it says, decide what you're going to do and don't follow the money. And well, it's easy for them to say. If you got a payroll, it's just like business. I mean, you got to shape your product and go where there's money to keep going. So I don't know that I have a good answer for it.
Yeah, but I do think that the ones that I've seen get in trouble have been ones that either intentionally or unintentionally have their money going not for building small business or micro organization capacity, but for buying goods. But the second part of my question has to do with...
the other thing too is, and this is for a whole nother discussion about nonprofit versus for-profits. I mean, that is one of the positive things about a nonprofit, is there are no shareholders. So there is no incentive to be pushed to do something other than what your purpose is, because you don't have Alan over there saying, I need more dividends, my stock's not worth as much. That's not happening.
The second part of my question has to do with the availability of funds for this very important market in Georgia and the rest of the U.S. and the world. And it's a poverty reduction sort of strategy that you're really using. And so I looked on your site thinking I can deposit money like a bank, and then you can loan out that money to others. And I'm just wondering why you have not expanded into being a deposit place for people, for the people who you loan to be the bankers for these people who are coming out of poverty, as well as for people who would just enjoy having a better place to park their money.
If we become depository, that's called a credit union. I mean, in this country, you're a bank, or you're a credit union. And I will not say that that's out of the question in the future. I think that might be a natural extension of what we do in the future. In both the banking environment and the credit union, you are regulated. And that is a very unique aspect of a nonprofit lender. Even though we're certified by Treasury, we are a very unique animal. We are not regulated.
So taking money versus giving money is a different thing in the U.S. Thank you so much.
Thanks for coming to Georgia Tech today, George.
I enjoyed it so much.